If you're comparing asset protection tools for your family or business, and if you're from the Middle East region, you will likely come across two names, the Dubai Foundation and the Wyoming Trust. At first, they seem to offer similar benefits, but they come from completely different legal systems, and how they work in practice can be very different. In this video, we'll break down how each structure actually handles asset protection, banking, taxes, succession planning, and reputation, so you can decide which one is the right fit for you. Before we start, my name is Shiraz Wahid, and I'm the co founder at Leopardus World, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. A Dubai foundation, especially when established in the DIFC or ADGM, is built upon a robust legal framework that blends common law principles with international best practices. It is an orphan structure, which means it has no shareholders or owners. Instead, it's managed by a council and governed by a charter and bylaws. This makes it especially attractive for families seeking long term continuity, control, and protection. Meanwhile, in Wyoming, what is often promoted as a foundation is typically a domestic asset protection trust. It is a US based trust structure that allows the settler to also be the beneficiary, and in many cases, retain significant control. Wyoming is one of the handful of US states that offer this framework with favorable asset protection statuses and low administrative costs. Now, let's explore how these two options differ in terms of asset protection. In Dubai, especially within the DIFC or ADGM, the foundation is legally ring fenced from founders' personal estate. Creditors must undergo rigorous court processes and cannot pierce the foundation simply because the founder owes a personal debt. Furthermore, the DIFC and ADGM recognize the principle of firewall protection, which ensures foreign judgments and are not automatically enforced. In contrast, while Wyoming offers statutory asset protection, it is still part of the United States. That means a foundation equivalent in Wyoming remains subject to the reach of the US courts, federal agencies, and potential legal changes. Asset protection exists, but it's not entirely offshore. Domestic judgments may still apply, and its effectiveness often hinges on case laws and the skill of your legal advisor. That leads to a critical consideration, that is, international banking. A Dubai foundation, due to its location in a well regulated international financial center, can open accounts at leading banks across Europe, Asia, and the Middle East. Banks in Switzerland, Singapore, and even within Dubai itself recognize these foundations as legitimate vehicles for wealth structuring and estate planning. Wyoming structures can open US bank accounts relatively easily. However, if your goal is to hold assets or open accounts abroad, the Wyoming Trust may face enhanced scrutiny. Many non US banks require FATCA disclosures, and US connected entities are often subject to de risking policies. In short, banking abroad with a Wyoming structure can be more challenging. Another area where these two structures diverge is succession planning. Dubai foundations are increasingly used to replace or supplement wills. They allow founders to set clear rules for asset distribution, including family governance provisions, dispute resolution mechanism, and tailor arrangements for beneficiaries who may not be financially mature. Wyoming Trust also offers strong succession planning tools, especially with dynasty trust provisions. However, these are still governed by the US inheritance and tax laws. If the beneficiaries live abroad or if there are cross border assets involved, additional planning may be needed. Taxation is a key differentiator. The Boy Foundation has no corporate tax liability as long as it does not engage in business activities within Dubai or derive local income. It's commonly used to hold shares, properties, or investments, not to run operations. There is also no capital gains tax or inheritance tax. The founders may have personal tax obligations depending on their country of residence, but the foundation itself remains clean and neutral. Wyoming foundations are also tax efficient within the US framework. Income retained in the trust may be taxed, but with proper structuring and the use of grantor trust rules, Some of this can be managed. However, the complexity increases significantly when beneficiaries are not US persons or when assets are held abroad. And of course, all structures must comply with the IRS reporting requirements. Now, let's consider reputation and optics. Dubai has positioned itself as a sophisticated, compliant jurisdiction with strong regulations, international recognition, and political neutrality. It is not viewed as a secrecy jurisdiction. DIFC and ADGM foundations are seen as modern tools for responsible wealth planning. Wyoming, while business friendly, is still occasionally associated with secrecy, especially when used with shell LLCs. In recent years, the US has faced international pressure over transparency, and initiatives like Corporate Transparency Act are starting to change the landscape. For international families, especially those with exposure to Europe or Asia, this may present reputational concerns. Setup and maintenance costs also differ. Dubai foundations generally require a registered agent, a council member, and a local service provider. Initial setup can range from $6,000 to $10,000 depending on the complexity and annual fee application. But in return, you receive a high-end structure with international flexibility. Wyoming trusts are cheaper to set up and maintain. You can form one with a few $100s and minimal annual fee. But cost should never be the sole criterion. You're not just buying a structure, you're buying peace of mind, bankability, and long-term legal resilience. So which one is better for you? If your primary concerns include global banking access, estate planning across multiple jurisdictions, and insulation from domestic legal risk, Dubai Foundation may offer a more elegant and future-proof solution. If you're US based, have limited international exposure, and are focused on cost-effective domestic asset protection, the Wyoming Trust can still serve you well. But increasingly, we see global families using both. A Dubai Foundation as the anchor structure, complemented by the US Trust or companies as part of the wider estate and tax plan. It's not about choosing one over the other, it's about layering your protection.